Hello and welcome to the channel. Today, we're diving into the exciting world of trading options and futures. Whether you're a complete beginner or looking to refine your skills, this video will cover the essentials to help you start trading successfully. Let's get started. First things first, let's define what options and futures are. Options and futures are financial derivatives that derive their value from an underlying asset, such as stocks, commodities, or indices. They are popular among traders for hedging risks and speculating on price movements. An option gives you the right, but not the obligation, to buy or sell an asset at a specified price before a certain date. There are two types of options: calls and puts. A call option gives you the right to buy, while a put option gives you the right to sell. Futures contracts, on the other hand, obligate you to buy or sell an asset at a predetermined price and date in the future. Unlike options, futures contracts require you to fulfill the terms of the contract at expiration. Now that we have the basics covered, let's talk about how to trade options. To trade options, you'll need a brokerage account that offers options trading. Popular brokers like Interactive Brokers provide platforms for trading options. I have put a link in the description to their latest sign-up offers. When trading options, it's important to understand key terms like strike price, expiration date, and premium. The strike price is the price at which you can buy or sell the underlying asset. The expiration date is the last day the option can be exercised. The premium is the price you pay for the option. Let's walk through a basic example of trading a call option. Suppose you believe a stock currently trading at $50 will go up to $60 in the next month. You could buy a call option with a strike price of $55, expiring in 1 month. If the stock price exceeds $55, you can exercise your option to buy the stock at $55 and sell it at the market price for a profit. Next, let's talk about trading futures. Futures trading also requires a brokerage account that supports futures contracts. When you trade futures, you can go long, which means buying if you expect the asset's price to rise, or go short, which means selling if you expect it to fall. A key concept in futures trading is leverage. Futures contracts allow you to control a large amount of an asset with a relatively small initial margin. However, leverage can amplify both gains and losses, so it's crucial to use it wisely. Here's a basic example of trading futures. Let's say you expect the price of crude oil to rise from $70 to $80 per barrel. You could buy a futures contract for 1,000 barrels at $70 per barrel. If the price rises to $80, you can sell the contract for a $10,000 profit, which is $10 times 1,000 barrels. Risk management is critical in both options and futures trading. It's essential to set stop-loss orders to limit your losses and use proper position sizing to manage your risk exposure. Remember, never risk more than you can afford to lose. To help you make informed trading decisions, use both technical analysis and fundamental analysis. Technical analysis involves studying price charts and using indicators like moving averages, RSI, and MACD. On the other hand, fundamental analysis involves evaluating an asset's intrinsic value based on economic data, financial statements, and industry trends. Additionally, keep an eye on market news and events. Economic reports, earnings announcements, and geopolitical developments can significantly impact the prices of options and futures. To wrap up, trading options and futures can be a profitable endeavor, but it requires education, practice, and discipline. Start small, manage your risks, and continuously educate yourself. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss any future videos. Also, leave a comment below with any questions or topics you'd like me to cover next. Don't forget to check out the link in the description. If you found this video useful, then you will want to check out the next video on share trading showing on screen now. All opinions expressed here are my own. This post may contain affiliate links and I may earn a small commission at no extra cost to you. Happy trading.